Alrighty, what is going on, everybody? Welcome back to another video breakdown. In today's video, this is going to be absolutely monumental, confirming every single thing that we've been attempting to show you all behind the scenes, what has been happening, the importance of the last bull market cycle, what happened, what caused the bear market cycle, how there is for a fact a infrastructure being built behind the scenes that will be able to handle large amounts of volume and volatility that these financial institutions are for a fact about to bring into this digital asset space. If you all enjoy these video breakdowns, do us a favor, smash that thumbs up button and subscribe, showing you guys what is happening behind the scenes, information that the mainstream media is never going to show you all. If you all are not up to speed and you're new here on the CYPRX platform, we have created a playlist for you guys to show you all some of the previous video breakdowns covering the topics that we are discussing today, to show you all that we're not making this up. This is for a fact happening. So go back and check out our previous video breakdowns. Go on the CYPRX YouTube page, click playlist, and look for the infrastructure playlist and watch those previous video breakdowns to familiarize yourself with what is actually happening. So we're going to play a series of video clips for you guys today. I'm going to be talking in between. I hope that you all enjoy this video breakdown. If you do us a favor. Again, it helps boost the algorithm. I know that you get tired of hearing it. I get tired of saying it, but smash that thumbs up button and make sure that you are subscribed to the platform so that way you don't miss out on any future video breakdowns. So the first video clips that I'm going to play for you all is two venture capitalists talking about the importance of understanding why the last bull market happened. Remember that the last bull market cycle happened was because we were in a low interest rate environment. Central banks and governments all over the world were handing out stimulus checks, pumping the market with massive amounts of stimulus to support and boost the economy during the CV-19 pandemic. And then why the bear market happened, because the script completely flipped. We entered into one of the biggest interest rate tightening cycles that we have ever experienced. Central banks all across the board started their tightening cycle, hiking interest rates, which created a risk-off market mood, coupled with the macro environment where we had wars announced, for example, the Russian-Ukraine war, creating a risk-off market mood, strengthening the US dollar as the global reserve currency, weighing on risk assets as a whole, making it harder for individuals to borrow money because of the high interest rate environment, which created, again, a liquidation event in the cryptocurrency asset market. Obviously, of course, risk assets all across the board depreciated in value, but this is why we saw a bear market. Understanding this information is extremely important because as we head into the future, we are potentially on the brink of central banks globally potentially starting to cut interest rates, heading us into a lower interest rate environment. And we know that in a low interest rate environment, risk assets tend to perform well. So keep that in mind as we watch this next series of video clips.
A base level explanation. I think a higher level explanation, if you went to like the highest level, you would look at, say, global macro markets and the flows of liquidity, interest rates, things that often determine the pricing of risk assets. And I would give Raoul Pal actually a lot of credit here, where he's been really on top of these debt refinancing cycles that tend to actually coincide with crypto bull markets. But basically just when liquidity is sloshing into global markets, when interest rates are pretty low, if you think about an interest rate, that is feeds into the discount rate at which you price forward-looking assets. And so the higher that rate is, the more discounted the asset will be. The lower that rate is, the less discounted a risk asset will be. Less discounted means higher price, right? And so right now we have very high interest rates around the world, but if those rates start to come down, which I'd say a lot of people are expecting that to happen next year into 2025, that could cause an upward repricing in risk assets, and crypto is the riskiest asset class, right? So arguably it's the greatest beneficiary. So that's a very high level and very low level explanation. I also think in between you can, think of product cycles and human psychology and, the boom bust nature of crypto as a market that trades 24/7, 365 that people get really excited about, but also pretty depressed about. And, because of the fast moving nature, it allows for these very hyperbolic moves to the upside or downside that then it takes people time to recover from, and builders to actually mature the infrastructure, and also create applications that are more user-friendly, that will pull in more and more people. And we've all been doing, everyone on this Zoom has been in crypto for a long time now. And so I think we've seen every expansion, how much better the products get, right? And we're at the very beginning of seeing new products come to market that weren't previously possible. that are the setup for this product cycle that will also drive expansion beyond just like the fiscal and monetary components.
Now, that is all information that we have been touting on the CYPRX platforms. You need to be understanding fundamentals, central bank speakers, the tone of surrounding central banks, interest rates, macroeconomics, and these fundamentals that come out on a weekly and monthly basis that actually move price action. Here at CYPRX, we provide a platform where you all can learn this information and educate yourselves on these topics from day to day, week to week, and month to month. But that's besides the point. Let's get into the next series of video clips. So, what have we been talking about in previous video breakdowns? Again, go familiarize yourself with what it is that we've been discussing, and that is what is different from this next bull market cycle, which is going to be absolutely massive. It is that in previous bull market cycles, the infrastructure was not ready to handle large amounts of institutional volume.
The crypto asset class had huge eyes on it, and the amount of sort of coverage that it got across mainstream media, plus the sheer sort of volume of interest that came into the market through that 2021-2022 cycle. I mean, looking back on it now, what's clear is the infrastructure, and by infrastructure I mean the kind of exchanges, the custodians, the service offerers that were in the market were not fit for purpose for that volume of interest.
Some institutions and large hedge funds were involved, but the mass amount of them were not. It was all driven previous cycles by speculative investing. And what is about to change now is, for a fact, large financial institutions have an uptick in interest and they are ready.
You know, we have altogether about 34 billion of assets that we're willing to put onto the system as soon as the rails are shown to work. And now they are shown to work. As soon as the rails are shown to work and
to adopt these technologies. They just need the infrastructure layer, the custody, the exchanges that can handle large amounts of volume ready for them, okay? And that is all taking place. So listen to these reputable individuals confirm that, i.e. individual representatives from Circle, individual representatives from Hedera, from Ripple, all confirming that the infrastructure as of right now is for a fact being built behind the scenes.
But we still think that there are echoes of how the technology cycles play out in the sub-revolutions or the sub-cycles. And the basic framework that Carlotta proposed is that for the new technologies, you have, broadly speaking, an installation phase, then you have a recomposition phase in the middle that is sort of a transition period between the infrastructure development and the widespread application development. And then you have, after that recomposition period, you have what she called the deployment phase. And the deployment phase is when all of the investments that went into the infrastructure in the infrastructure phase then materialize into products that become part of mainstream usage. And crypto definitely does seem to be following that same pattern. And one of the things that's really stark is, as part of the installation phase, she describes that there's two periods. First is the eruption, which is about a decade plus of when the technology has been invented, but we don't quite know what to do with it. It's just kind of there. It's a little bit of a toy. You have some nerds and some kind of diehard technologists really playing with it. And that feels like the first 10 years of crypto, where we had this blockchain thing and no one was really quite sure why it would be useful. And Bitcoin was essentially the only game in town and everything else was a derivative of Bitcoin. And then the second part of the installation phase is what she called the frenzy, which is a time when suddenly it clicks and we sort of understand, okay, now we sort of know what to do with this new technology. And that catalyzes a boom in investment and interest. But all of the infrastructure still hasn't been developed yet. And so what you have is a lot of capital being invested into a vision more than a reality. And that tends to create financial bubbles because you have an excess of financial capital that exceeds the current technological reality. And ultimately that comes to a crash because the reality evolves at a certain pace. Financial capital kind of sloshes back and forth quickly by the variables that Chris described. And what's interesting about the crash and recomposition is that it's a very important time in the evolution of whatever technology is going through that cycle. Some of the elements that Carlotta described are kind of eerily similar to what we're living out today.
Now it's like, I would say we're in like the 2002 of the internet, where all of a sudden the broadband pipes are getting laid down. All of a sudden the software that makes the experience of the internet far, far better is coming online. That's where we are with this. And so essentially you need legal certainty. So you need legal certainty on how these are treated and how they're used. That's happening. You need scalability, so you need infrastructure that can readily support, both from a user experience perspective and a raw throughput perspective, the kinds of things where you can do internet scale things. That's happening right now.
Also, as we have scaled up, we've had to start looking at how do you manage huge amounts of data. Because, of course, if you're immutably storing everything forever and you have 1,000 transactions a second or tens of thousands or whatever, you have to be storing that and then be able to access it quickly and all of that. And so there's a lot of infrastructure that is being built. Right now to handle all this usage that is coming.
Look, Ripple at its core is a blockchain infrastructure company serving enterprises. We started with payments and financial institutions. We've moved into custody, a lot of overlap with those same financial institutions. But we're going to expand with that same thematic of infrastructure, enterprise-based, that served us well.
So that is absolutely massive, and another reason why we here at CYPRX are super bullish on the next couple of years, looking forward into the future, because for the first time ever, we as manual retail investors have the opportunity to front run the banks. We do not have as many regulatory restrictions as they do, so we right now have the opportunity to buy up these digital assets at dirt cheap prices before they onboard into the space and ramp up the volume and the liquidity in this market. Again, not financial advice, do your research, but I have a firm belief that retail investors that miss this opportunity will never again get the chance to buy these utility-driven assets, the ones that do survive, at such a discounted price. Just look back in previous market cycles, for example, the stock market in the early 2000s, you will never be able to buy Google for a 2000 price again. You will never be able to buy Amazon stock for a 2000 price again. What I mean by that is in the year 2000, look at the prices. Look at the prices of these stocks back in 2005, 2008, and so on. You will never be able to get these stocks for that cheap again, even if the market crashed 90%. And I have a firm belief that in the near future, we are going to see that type of explosion in the digital asset space. Again, that is my personal opinion. It is not financial advice. Do your research. Now, in the next series of video clips, we're going to confirm and talk about this mention of the flip of the switch. Now, this is predominant in a terminology that floats around the digital asset space, but here I'm going to show you all some video clips of some reputable individuals explaining that this is exactly how they built this market, this new world, this going from the old infrastructure to the new infrastructure. They made it so that way when financial institutions are ready, when organizations are ready, and when the masses are actually mentally and physically ready to handle what is about to happen, they can seamlessly integrate themselves into this new infrastructure by just switching over. So take a second and listen.
If we have an industry that is very powerful and the world hasn't yet seen everything it's doing, the only way to reach the other 99% of the world is for it to be easy to use, easy to develop on, smooth experiences for the developers. And so we put a lot of effort into that, into making this easy to switch to it, easy to learn it, easy to build things. And so we put a lot of effort into that, into making this easy to switch to it, easy to learn it.
And this is kind of the same idea. You can build a federated sidechain with some feature that you want to propose for inclusion in the XRP ledger, and you can handle real money with it. You don't have to. But you have a switch that you can flip whenever you're ready to handle real money. But you have a switch that you can flip whenever you're ready to handle real money.
And I don't think this is decades off. I think this is years off. And I think we're going to start to see it accelerate, particularly with a tighter regulatory framework. Large financial institutions who are and are arguably earning excess rents right now are saying, oh, that's never going to take away my margin. Everybody's aware. Everybody's aware it's coming. Everybody's aware it's coming, and they're preparing for that inflection point where it's all of a sudden, okay, I have to pivot. I have to give up that, but I'm going to build efficiency. This is not going to be where people, I don't think, maybe some are going to be asleep at the switch, but I think for the most part, people know this is coming. It's going to change their business models, but it's going to make them more efficient. So it's one of these, lower revenue, higher margin opportunities. And it's just, as soon as it starts to happen, I think it's going to be,
So these are all massive video clips that will never make the mainstream, just confirming some things that we have been touting on the CYPRX platform for some time, which is you need to understand macro conditions, macro environment, central bank tone, central bank speakers, interest rates, day-to-day fundamentals, weekly fundamentals, monthly fundamentals that actually move this market. The second thing is that for a fact, in previous market cycles, the infrastructure was not ready to handle large amounts of institutional volume. That is for the first time all set to change. In the next couple of years, we are going to see massive institutional adoption, massive amounts of volume flood into this space. Don't get left behind.
And so we invest slowly, and we try to make sure that we get enough time diversity. And like Chris said, we're not trying to kind of tie ourselves to a particular month or a particular quarter, but more pay attention to how the cycles are playing out. That said, whether this is good or bad, it really depends on which side of the market you're on. As far as we're concerned, this is one of the best times to be an investor and to be investing. And this takes us back to 2018 and 2019, which were our favorite times to be investing as venture capitalists, but also in the public markets.
But long-term investor, definitely what Joel's saying is correct. If this is a time of amazing opportunity,
By doing research and understanding what is taking place behind the scenes, you can capitalize on opportunities. I'm not here to discuss or talk about what opportunities those are for you. You need to make those executive decisions by taking action, potentially joining a community like ours or other communities out there that provide this such valuable information right now, considering that we are in a fourth industrial revolution. People, please wake up. Okay, it's so crazy that people will watch this video breakdown and still take no action. They won't join a community. They won't learn how to trade. They won't learn how to invest. They'll just watch this and think it's all conspiracy theory. It's not. These systemically important people, like the director of the IMF, have openly stated that crypto is not going anywhere. They're not here to crush the crypto markets. They're here to evolve. They're here for this revolution that is taking place. Okay. If you're not tapped in, I'm telling you all, make sure that you're subscribed to the platform so that way you can get tapped into this info. And then last but not least, the terminology, flip the switch. Again, it's not like they're just going to go and some switch is going to be, no, it's when everybody is ready to transition over to the new system, they will be able to easily. Okay. Easily meaning the custody provider will be in place, safely being able to store their digital assets, being able to migrate massive amounts of volume and liquidity over into this new infrastructure without exchanges shutting down. That's what we mean by flip of the switch moment, and that will take place. It will seem like it happened overnight, but in reality, it's been happening over a prolonged period of time. Over the past couple of years, this new infrastructure ready to handle this new amount of money is and has been being built. So hopefully you guys enjoyed this video breakdown. Do us a favor, as we are always providing this fundamental research for you guys, showing you what's really happening behind the scenes. No hype, just systemically important individuals and reputable individuals saying exactly what we've been telling you guys here at CYPRX. Smash that thumbs up button for us. Make sure that you're subscribed. Share this video breakdown. It goes a long way, and we really do appreciate the love and the support. If you want a community to join with like-minded individuals like yourselves interested in this technological revolution, learning how to trade, learning how to invest, and gathering valuable information like clips of these systemically important individuals and reputable individuals talking about the digital transformation, you guys can visit CYPRXtrading.com. We'd love to have you on the team. As always, be cognizant, be aware out there. Remember, I'm not telling you guys to go out there and invest in digital assets, but what I am saying is there are massive opportunities to be made. You need to capitalize and think about potentially what those opportunities are and take action. I'll see you guys in the next video breakdown.